Hey everyone, this is Dan with Data Trend. Today is Thursday, February 11th, 2016. It's about 2:15 p.m. or so here. The markets closed 15 minutes ago. We're in Mountain Time. Before we get into the markets, I just wanted to say real quickly that there may not be a video tomorrow evening, Friday the 12th. I have some things going on in the afternoon. I might not get around to making a video. I will, however, update the trade spreadsheet when I get a chance sometime tomorrow evening. And if not tomorrow evening, certainly by Saturday morning. So let's go ahead and take a look at the Russell 2000. The market closed the day off about 1% today, down at 953 and change. And today I just wanted to take a step back. We've been starting on the daily chart a lot, but just take a step back to the weekly chart and take a look, a bigger picture perspective at what we're seeing. So this is a picture of the market, and early in the year we saw the market come down and it traded out of this area of consolidation up around 1100 or so. And from that level we made a big fast break lower, and that brought us sort of into the neighborhood of 1000. And we came to 1000, we bounced up to this rising trend line, and this trend line goes back to 2009. We pointed out this area of potential resistance, and we said, the market it's possible that it's going to come into resistance here. We have a rising trend line. This was prior support that was violated, so there was just the potential for sellers to exist kind of in this area. And from that level, the market headed lower relatively quickly, right through 1000, and crashed all the way down here to about 943 or so, and that was this morning, incidentally. And this level it came to again is another area that we've identified as an area of potential support. And I guess what I want to point out really is that there are a lot of these horizontal lines drawn across the chart here. And these are areas of potential support. And what that means is that they are not support until they actually hold and the market's able to do something productive or build higher. It seemed as though some support might be building in here, but clearly it didn't happen, and the market's continued lower. And on the downside, we just continue to violate support level after support level, and we're at another support level. And so we just have to sort of look at this thing and say, where does it have the potential to go if it continues lower? On the weekly time frame, it looks sort of like the next target would be down around the 900-ish level, maybe 900, somewhere in there. That's the next area where the Russell might slow down if it breaks lower through this 944-ish level that it came down to today. I don't know if that's going to happen. We'll certainly have to see. Again, the market can always turn higher in the short run and continue lower, but there's nothing in here constructive at all. I mean, there's nothing to suggest that a base is forming, a bottom's forming, or that buyers are coming into the market. We're just seeing a pattern of lower highs and lower lows, and for the time being, that's holding true. So it's a good time to be cautious and just be aware that the general trend in the market is certainly lower, and these little intraday rallies are easy to get faked out on because they're very, very strong intraday, and they're failing. So just be aware of that when you're out there trading and you're not getting too whipsawed in these positions. So if we drop back over to the daily time frame, you can see the market gapped lower from the close yesterday, and I know it's sort of messy with all the expiration break-evens, and it traded lower early in the day and then pushed back higher at the close to end off just 1% or so, but it was off more than that intraday. The expiration break-evens for the position, again, the lower is down here around 915 or so, so with a push down to that 900, 910, we should be okay. And the upper expiration break even is around 995-ish. This is showing 997, but approximately 995 or so. And one of the things I tweeted out earlier today is that if the market traded higher and held up above this 955-ish level, which is right here, and I was looking at the Russell futures, the TF, then I was thinking about rolling down one of the upper long puts, but we just haven't had any sort of real constructive price action. We're down to the 65-minute time frame, and all we see really is that the market continues to make lower lows and lower highs. And this morning was no exception. We gapped down lower, didn't close the gap, and traded lower before turning higher, finding a little bit of resistance here at this area that was prior support up around 955. And so the only thing we can really do is assume that what we're going to see is a continuation of this trend of lower highs and lower lows. So it's definitely a bearish environment, and it makes sense to be cautious out there. We're not seeing anything constructive, and I really want to emphasize that even these little tears higher and things that we're seeing are failing. This was actually a scenario that we laid out earlier last week. So that getting up and above this 975 level, or earlier this week, getting above this 975 level could potentially take us up here to about 985, where we thought the market might fail and then head lower. And that's exactly what happened. So this isn't about being predictive, it's just recognizing the environment that we're in. And right now the environment that we're in is clearly lower. So let's go ahead and jump over and take a look at the position itself. So this is the trade. Right now we have two butterflies centered at 955, and the long strikes are 55 points out on either side. I also have a couple of IWM calls, the 99 and the 100, and I'm just trying to get these IWM prices to populate. The 99 and 100 IWM calls, and then also I have just a disaster protection put down there at 82 that I picked up a couple days ago when the butterfly, I think it was when the butterfly was full size. But this is just to protect against some sort of catastrophic gap lower, say beyond the 900 level down into the high 800, something like that. If we have a gap like that, I'll be very happy that I own this put, and it only cost 38 cents at the time. So I think it's a good buy. I'm willing to hang on to that. So as of the close today, the position is looking pretty good. You can see the market closed here at 953. The delta is negative 0.85. The gamma is negative 0.18. And this is starting to get higher, and it's going to continue to get a little higher, I think, as we get closer to expiration. The theta is 2075, Vega's negative 50, and we're showing an open profit again of about $36 and change. So that's pretty good. If we go back over to the chart, we got involved in this trade somewhere around here on January 19th or January 20th. January 19th, it looks like, based on the spreadsheet. So on January 19th, we got involved in the trade when the Russell was trading around 1009. So that's somewhere right about there. And from that level, we traded down to, about 958 or so. From 958, we traded all the way up here to 1035, and from 1035 we've traded down to 945. So this has been pretty challenging because we've been shaken out here on the downside. We got chased to the market higher again. After the market went all the way up higher, then it started tumbling lower, and so we've been adjusting the position down. And that's essentially the philosophy of what we're trying to accomplish. We're not trying to predict where the market's going. We're just trying to recognize where it has the potential to go. And we're moving this little pocket of decay, the butterfly, or the multiple butterflies as we get into more positions, along with the market without taking on a whole bunch of directional risk. And so for the time being, the position looks good. If I was to roll in one of the upper long puts, I'll just show you what that would look like. So I'd analyzed this trade earlier today to sell out one of the 1010 puts, which you can see is right here where the upper long is, and to buy one of the 1005s. So this would do it only to one of the two butterflies that's up here. And if we were to do something like that, you can see that it has a pretty profound effect on the upside. And essentially what it does is it cuts down the delta significantly on the upside. And the reason it does that is because we're getting less short. We're buying a more or a less in the money put, I guess. So it makes the position less short, and if the market was to trade back higher, then we would be safe and we'd be protected on the upside. And again, the reason that I didn't want to do that is I was looking for the market to kind of get above this 955-ish level. If it had been able to hold up here, I'd start to get a little bit concerned that maybe we're going to make a run for this 985 level or something. And if we can get there and hold above the 985, then certainly I'm concerned about heading back higher. But for the time being, neither of those scenarios has played out. We haven't been able to hold up above this 955-ish level. The market's closing down below it, and getting up and above this 985 seems even more unlikely at this point unless we can get up and above this. So that's all I have for today. I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.